Today I'm going to explain what's a golden cross and a death cross in trading. So basically a golden cross and a death cross is when the 50 moving average crosses to the upside or to the downside the 200 moving average. In this case, for this video, I'm going to use exponential moving average that is more quick than the simple moving average because the calculation method that is based for calculating the moving average itself. But basically, a golden cross is where the 50 moving average, in this case, to explain the golden cross, we have to take into account that the 50 moving average is this white line and the 200 moving average is this blue line. So basically, a golden cross is here where we have the cross of the 50 moving average crossing above the 200 EMA. We can consider this a golden cross. You need to have in mind that a golden cross is considered in the daily time frame, okay? We are in the daily time frame right now, not in the 4-hour chart, not in the weekly time frame, okay? In the daily time frame. Because to explain you a little bit more, a moving average, basically what it does is that takes the 50 candles before the period that we are analyzing and they print an average and they print let's say a line to simplify all these candles and all this price action and the volatility. So basically the moving average, what wants to do, the objective is to calculate the 50, in this case the 50 period is the 50 candles before this point that we are drawing right now, and they are trying to simplify all the volatility and all the price action, all the noise from the market. And in the same way, the 200 EMA is taking into account the 200 candles before the point. For example, if we are taking this point is taking the 200 candles that were printed before, calculating an average and printing a line in order to simplify the trend or simplify the price action or the volatility that the asset is having, okay? So basically a death cross is the opposite from the golden cross. So if we go back here, we can see here a death cross. A death cross is where the 50 moving average or exponential moving average crosses below the 200 EMA or the 200 exponential moving average, always in the daily time frame. So this what means for us as traders, okay? So for example, as traders we can assume that when the 50 moving average crosses to the upside to the 200 moving average, we can assume that we are in an uptrend. So the asset, we will be trading the asset in the long side or buying the asset, okay? As you can see here, for example, here we have a golden cross in the daily time frame, and then the asset initiates a bullish trend, okay? And then again, when a death cross happen, is the contrary from the golden cross. In this case, we are going to sell the asset or trading short, okay? Taking only shorts. As you can see also, it's pretty common that when the asset is trending down because we had a death cross, the bounces go into the 200 EMA. So entering into the 200 EMA is a good entry point if we have confirmation that the trend is to the downside. So we can enter short, for example here, we can enter a short, a spot short, for example, or a low leverage short, okay? Taking the entry point in the 200 EMA, okay, in the blue line, okay, in this case. And in the other side, if we are going to go long, we can take every bounce that we get in the 200 EMA, for example here, as a long entry point, okay? Because you can see that here was the golden cross, and then the price retested the 200 EMA and then expands another time, okay? So we can take the 200 EMA as an entry point, and every bounce that we get, we can enter long or short depending if we got in the past, in this case, a death cross or a golden cross. Also, you need to be aware of false signals. Why I tell you this? Because here you can see that Bitcoin reached the $64,000 area and then retraces. Here we have a death cross because the 50 moving average is cutting down the 200 moving average, but then the price reverses aggressively and that did a golden cross again, okay? So you need to be aware that these signals maybe sometimes are false signals. So you need to combine with price action. You don't need to look just as the moving average. You need to combine with price action. If we go to the past here, we can see that this massive uptrend that we got before the bull run on 2021 was also, let's say, prompted by a golden cross, okay? But as I said before, we can get false signals. For example, here was a golden cross, then break to the downside, dead cross, and then again massive run up or bull run to the upside. And as you can see here, we did not get another dead cross till almost 1 year later, okay? So you need to be aware of this. This golden cross or dead cross, let's say, indicators for buy and sell, there are sometimes right, sometimes wrong. So you need to combine this with support and resistance levels, price action, and other indicators. You don't need to focus just on this EMA or moving average strategy, because focusing on one indicator or one signal is going to be a deficient trading system, and is going to give you headache or false signals or other things. Other example before closing the video, you can see here another golden cross, but immediately golden cross, the price retraces, okay, and then pumps again. That's why, because as I said before, the people wants to enter, the traders want to enter into the bounce of the 200 EMA. So for example, here the golden cross was not developed, but the price was bouncing in the 200 EMA. So a lot of people was entering long, and obviously a lot of liquidity was created below the price. So normally or usually, what market makers or also other players do in the market is that where a lot of liquidity pools are generated on one side of the chart or another side of the chart, they push the price to clean this liquidity and then reverses to the opposite side. This is a mean reversion trade. So here what happened most likely is that a lot of traders took that long, then the price goes against them, they will be forcing to close their long positions or selling into spot, and then the price do a massive run up. But as I said before, you can see that every bounce that we get in the 200 EMA should be taken as a buy signal, okay? If we are in an uptrend, okay? If we are in an uptrend, every time that the price reaches the 200 EMA, we should consider to take a buy or a long position. Also, you can need to figure out a little bit that here, for example, indeed we were getting a dead cross because the 50 EMA was crossing down the 200 EMA, but the price what did was reversing, and now we are at 50k or 43k, okay? But here we got a false signal. What was likely that happened here? A lot of people were jumping short, okay, into the last swing point, okay? They were expecting the price to go down. They were generating a lot of liquidity above the price. They were jumping short, and then what the price did, as I explained before, the traders were generating liquidity pools here, and because their stop losses were clustered around these areas, and then the price reverses aggressively into the opposite side and then continues the uptrend. So this is, let's say, also the golden crosses and dead crosses can be used as a contrary indicator, because we know that a lot of traders, a lot of traditional traders or beginner traders are using the golden crosses and dead crosses in the daily time frame, obviously, as confirmation or as signal to buy or sell or enter long or enter short. So if we know that the majority of the traders lose money in the market, and we know that the majority of the traders use this kind of strategies using moving average, we can understand better the market, understand better the psychology, and if we combine these signals with price action, with psychology and market sentiment, we can take the contrary sentiment low, okay, and take the opposite trade of what every trader every trader is doing in the market. So basically this is what a golden cross is. Simplified to resume a little bit before ending the video. A golden cross is where the 50 moving average is crossing up to the 200 moving average, and a dead cross is when the 50 moving average is crossing down the 200 moving average. As I always said, if you want to follow me on Twitter at trading_soldier, you can find a lot of trading ideas that I publish daily on the market or my market analysis. Also these videos, you can find them there on Twitter, or X as we call it right now. And also follow me on Instagram at trading_soldier_official, where you can find a lot of motivational reels and videos that I publish, also another kind of content. So follow me there if you want to see more of my content. And thank you for your time, and we see you in the next video.